Please tell me, when should I buy a stock?
Good day, subscribers, and welcome in. Today on the Financial Education Channel, we're going to talk about one of life's great questions. When should you buy a stock? When is the right time? Like, does it hit this number? Does it hit that number? So many people with so many different opinions on when you should actually start buying a stock. So that's what we're going to discuss today, guys. I'm going to tell you exactly how I decide on when I should buy a stock. And I say, okay, it's time for me to start buying this stock, right? Because I got like, hundreds of stocks I track all the time, but I buy very few of them. So I'm going to tell you guys kind of like exactly what I do. So there's so much debate about this, all right? Some people think like, okay, the stock's going this way and then it goes up and okay, now it's time to buy. We got to buy. This one's moving up. So it's got the momentum, it's got investors buying in, maybe it's got big money coming into it. We're gonna ride this trend and it's just gonna keep going up, okay? And that's some people's belief that, okay, this stock's moving up, this is a good thing, I wanna buy, shares, or if I've already bought some here, I wanna buy some more, and things like that. It's gonna continue to go up, it's gonna continue to have the momentum. Well, as we know, that's not always the case. Maybe it goes up some more, but a lot of times, something happens, bad earnings, or maybe the stock just got too ahead of itself, and then it goes down in a massive way, okay? We've seen that time and time again with stocks, that are hot, that have the momentum, and then they don't have the momentum as soon as they report some bad numbers, or an analyst puts a sell on it or something like that, and then the stock gets killed, right? But that's kind of the first one, and so that doesn't really work, okay? That doesn't really work. Just buy the winners, buy the winners. It doesn't work that way. I wish it was that easy. If it was that easy, man, we'd all have so much money, it'd be disgusting, guys. If it was that easy as far as like, oh, this stock's going up, let's just buy it. No. Okay, some people say, a stock like this, it's kind of like flatlining. Okay, now it's time to get in. This baby's ready to make a big upward move, okay? It's been just steady for a long time. It's just chilling. It's time to buy in the stock, and it's gonna go up. It's gonna go up now. This is the time it's gonna go up, okay? This doesn't really work either, guys. Okay, it's been flatlining for a while. Who knows why? It could have been because, it hasn't had much going on with the company. Then maybe they're just meeting numbers. Maybe, who knows why it's flatlining like that. Very rarely stocks do that, but just because it's flatlining, once again, it doesn't mean it's going to go up, okay? Could as easily go up or down, depends on where the business is going, right? So that doesn't really work either, that whole philosophy of going that route. Some people say, well, if it's, like this and then it goes down, okay, now's the time to buy. Now the time to buy. It went down a bunch. It's due, man. It's due to pop back up. It's due to pop back up, man. We're going to make a lot of money on this. It's going to come back to here or somewhere close to there, and we're going to make a fortune on this, right? Buy low, sell high. That doesn't always work either, guys. That does not always work either, okay? Just because a stock's gone down a bunch doesn't mean it doesn't deserve to go down more in the future. It's going to depend on where that business is going, right? Where that business goes over time is what's going to dictate where that stock price goes over the long term. So just saying, okay, the stock's going down, we're going to make a lot of money because it's going to go back up. Doesn't work that way. This company, who knows? Maybe they go bankrupt, or maybe they stay down there, okay? There's been a ton of stocks that, fall to that, $10 range or $8 range or $5 range or $3 range, and they stay there for a long time or until bankruptcy, all right? So just because the stock goes down a bunch, once again, doesn't mean that's necessarily a buying opportunity, all right? So how I think about it as far as me buying stocks, I like to think about a few different things. The first one is I like to think about, do I understand that I will never always make money in a stock 100% of the time? Yes, okay? Something we always got to understand, like you'll never make money 100% of the time. It's always going to be a few stocks here and there that just don't work out for whatever reason. The business went wrong, management made screw-ups, who knows? You can always lose money. Like it doesn't matter. Warren Buffett, the greatest investor, that we all look up to, right? At least as value investors. Anybody you look at, they've all lost money on stocks before, okay? But the trick is you got to make money a lot more times than you lose money over the long term. So the first thing I like to think about is I like to think about, 5 years out, okay? The 5-year plan, I call it, the 5-year plan. So when I think about this business, 5 years from now, can I really see this stock being at the same value or less of a value than I am buying at today? And the answer always needs to be absolutely no, okay? Absolutely not. Like, there's no way possible I could see this business being valued the same it is today or less than what I am buying at these shares now, 5 years from now, right? That's the first thing I like to think about. You know, that really kind of gets me thinking about the business overall, where the business trends are going, where I see the business trends going, where that industry is going, everything like that. It's called the 5-year plan, guys. All right, 5-year plan. If you see that business, you know, going down or even having a chance to go down realistically in 5 years, it probably means it's not time to buy. It's got to be like a no-brainer. Like, I'm going to make money in this, okay? Second thing I like to think about is if I couldn't sell. So if I can't sell, let's just put it that way. I can't sell. So if I can't sell these shares for, let's say, the next 5 years, will that determine, you know, me losing money in that stock? Would I feel comfortable basically being in that stock for a 5-year span? I can't sell those shares. Let's just imagine like the stock market closed or something, or I couldn't log into my account, something crazy, okay? And I literally couldn't sell those shares for 5 years. How would I feel about those shares? Would I feel comfortable with them? Would I feel comfortable with them if I literally couldn't sell those for 5 years? If the answer is no, it's probably not the right business to be in, right? You probably don't want to be invested in a business that you feel like, oh man, I really need to trade this next year or next month or next week or 2 years from now. I don't feel comfortable in this business over the next 5 years. If you feel like that going into investing in a particular stock, that's probably not a stock you want to be in, right? Why would you want to be in a stock that you feel like you need to trade all the time, or the business might go south big time in a year or two? Like, why would you want to be in that type of stock? You want to be in the type of stock that, you know, over the next 5 years, you've looked in all these things and you see that business expanding. Management sees that business expanding. If you're not in that type of company, well, like, why even buy in the first place? And the last thing I like to think about, which really kind of determines, you know, whether I buy a stock or not, is I like to think about the earnings, okay? The current earnings and where those earnings, I expect them to go over time, where management expects them to go over time. The easiest way I like to do this is kind of like the PE ratio, okay? So I talk about forward PE all the time on this channel. It's probably one of the most used terms, like if you add up my videos when I'm talking about particular stocks, I talk about the forward PE. What that basically means is over the next 12 months, how much money is that company going to bring in as far as profit goes versus whatever that company's market cap is. There's two different ways you can calculate it. One is, you know, net income versus what their market cap is. One is EPS versus their share price. Either way, you're going to get to the same answer, okay? So what this basically tells me is it tells me how many years would I need to be invested in this stock for me to get my full payback. So let's assume a company has $1 of EPS, okay? Assume this company has $1 of EPS right now, earnings per share, all right? And let's say those shares are trading at $10, all right? Let's say those shares are trading at $10 share price. So what this means is this company has this $10 share price on it, $1 EPS. We divide those numbers out. You basically get a forward PE of 10, assuming that they would just earn that. So let's assume you never expect this company to grow or decrease in the future, which would be a very weird instance, okay? If you don't expect this company to grow or you know, their sales to decrease, basically what this means is it's going to take about 10 years for you to get a full payback as far as the profit versus what that company actually cost you, okay? It's going to take 10 years. So if they make $1 of EPS per year, if you're in that stock for 10 years, and that's what they always make, it's going to take 10 years for you basically to get a full payout of your investment. So assuming they, you know, let's just assume they would pay all that dollar in dividends each year, okay? You would basically make back your full investment, 100% of your investment money back within 10 years, okay? Not only that, but then you still own the underlying shares. That's a way I like to look at it. Now, rarely companies like, you know, stay at making $1 EPS, and rarely they would pay out 100% of their money in dividends. I just think that's a simple way to kind of understand business, because that's kind of the way you always think about it. Like, what's my return? How long would I need to be in this investment to double my money? That's something I always like to think about, right? A lot of the companies I buy, a lot of them have forward P's of 10 or under, okay? You look at a lot of the companies I own, but a lot of those companies, as far as when I look out over the next 3 to 5 years, they're going to expand their EPS quite dramatically, okay? okay? A lot of them probably, in my opinion, will double their EPS probably within the next 3 to 5 years. So I'm paying a low price, and they should, definitely increase that EPS over time, over the next few years, which puts me in a situation where, obviously that company's valuation ends up having to go up and up and up over time. And if it doesn't, then the company can just start paying massive dividends at that time and just pay out the shareholders that way, and I can make my money that way. Or they can buy back shares, which would make the EPS look even bigger and bigger and bigger as long as they keep bringing in that net income or more of that net income, right? That's how you kind of really want to think about it as far as when you should buy a stock. Because like I said, I track hundreds of stocks, and I buy what? How many stocks do I hold in my personal portfolios? Maybe, I don't know, 7, something like that. But yet I track hundreds and hundreds of them. I just pick a select few. I'm thinking 5-year plan. Where's this company going over the next 5 years? Do I even think there's a remote possibility I don't make money in this one? If there is, then I probably don't want to be in it, okay? Also, if I can't sell those shares for 5 years, am I going to lose sleep over that? If I'm going to lose sleep over that over the next 5 years, probably not a stock once again I want to be in. I want to be in a company that I trust that management team with my money, because I'm essentially buying these shares in the company, right? I trust, in the simplest way you could think of, management has that money now, even though they technically really don't. You could say, well, management has that money, control that money, because whatever they do in the business over the long term is where those shares are going to, price is going to go. Short term, anything can happen. They could report bad numbers, or analysts could say this, or who knows what. Shares could move up or down bad in the short term, doesn't matter, okay? But over the next 5 years, it's going to determine where that management team takes the company. And the last thing is the earnings forward PE. Where's that at, man? How long is it going to take me for me to double my money on this position? Things like that, guys. 3 stock market tips that will hopefully make you a lot more money in the stock market over time, and also hopefully save you some money from making a mistake, all right? I've been in the stock market now for over 10 years, and in the position I am in, I feel like I have to kind of share some of these tips with you guys that are beginners in the stock market. Some of you guys that have been investing for less than a year, which you are a beginner in the stock market if you've been doing this for less than a year. And some of you guys are probably watching this video right now that are still yet to get in the market. You haven't really invested any money. So this is a video for you guys, or some people that maybe have been in the market for a while, but you just haven't made a lot of money yet, and you're kind of like looking for that opportunity. I've always had the majority of my wealth in the stock market, and I've always just been focused on building that number bigger and bigger. The stock market can be a very fun place as long as you have the right mindset, the right strategy, and a work ethic for this, and staying disciplined. You can make a ridiculous amount of money over time. You can build incredible amounts of wealth. You got to just have your head on straight and have the right strategy. So I hope these 3 stock market tips I share with you guys here today hopefully make you a lot more money over the coming years, and hopefully save you some money as well. And without further ado, make sure you smash the thumbs up button if you enjoy me sharing these 3 tips with you, and let's get into this. Alrighty guys, stock market tip number 1. This is going to help save you a lot of money in the stock market and hopefully make you a lot of money in the stock market. And number 1 here is don't blindly follow the trend. So many times in the stock market, people blindly follow whatever the trend is, and this ends up losing them a lot of money or not making them a lot of money. Here's what ends up happening sometimes in the stock market. You have individuals out there who see a stock going up or an industry that's really hot, and they're like, look at this industry, these stocks are going up every day, it's getting crazy, man, I need to jump in this. And so they go ahead and they start sticking their money in some of these stocks, right, that are the hot stocks. And what they find is very shortly after those stocks start to go down, keep in mind everything in the stock market, if it goes up too high and it gets way overvalued, eventually that price starts to drop, and it drops a lot. And so folks will think, oh my gosh, these stocks just keep going up. Oh my gosh, this industry, look at over here, everybody's making so much money. I just got to throw money in these particular stocks over here. And they go ahead and do that. And a lot of times they get absolutely destroyed. I've seen it time and time again where beginners in the stock market will blindly follow a trend and end up losing themselves a lot of money. I've also seen on the flip side where people think that just because Wall Street hates a stock at a particular time, just because Wall Street, there's not a lot of buyer momentum in the stock, they think that's a bad stock. Absolutely not. What matters is a business's fundamentals underlying in that business model, okay? And where that's going over time. How do you tell all that? Reading 10Ks, reading 10Qs, listening to conference calls, doing the actual work necessary to pick great stocks, okay? And what people end up doing is they're like, oh, that stock's down 30% this year. That means that's a bad stock because Wall Street doesn't like it. Absolutely not. That could be a diamond in a rough opportunity there. I buy unbelievably undervalued companies all the time. And some of our best gainers are on stocks where everybody hates at a particular time. We get in it when everybody hates and when that stock price is way low. And then all of a sudden the market comes back to reality and they realize, whoa, we went way too far in the stock, and the stock goes up a dramatic amount. I remember ELF stock earlier this year, right? Around February, March, we were buying that stock like crazy. Wall Street hated it. Wall Street hated that stock. It went down to like $7 a share. And now here today, here we are, what, 9 or 10 months later? Not even 10 months later, about 9 months later. And not even 9 months later. I'm thinking now it's like 7 months later, 8 months later. And ELF stock's gone up over 100%. We made over 100% on that position in about a 7-month time. That is ridiculous, okay? And how did we go ahead and do that? We did the work necessary to understand Wall Street's got it wrong with this stock. We didn't blindly follow the trend. Everybody hated that stock. We got in that stock and we made a triple-digit gainer in literally 7 months' time. That's absolutely incredible, right? And that's how you really make a lot of money in this game. And you can't just buy stocks because they're down just to say, oh, I'm going to be contrarian. You got to pick those rare opportunities when you fully research the business, you understand it, you know everything that's going on, and Wall Street doesn't see what's going on there. You went ahead and found that opportunity, you invested in it, and that's how the real players make a lot of money. If you're someone that wants to outperform the market, you can't blindly follow the trends. You'll end up losing a lot of money and you'll miss out on some phenomenal opportunities when Wall Street doesn't like a stock at a particular time. And here you are, you come in, you've done all your research work, and you're like, they've got it wrong with this stock. I'm gonna buy. You go ahead and take advantage of that opportunity. And I've seen a lot of people that have taken advantage of some incredible opportunities when the market dips, when everybody hates the market at a particular time, or just when sometimes these stocks get way undervalued and they have the vision for it and they're like, dude, Wall Street has it wrong, because they get it wrong all the time. This is what happens, and this is how you can get unbelievable gains in the market, okay? So stock market tip number 1, don't blindly follow the market. Trust me, you will regret blindly following the market if you do that, okay? Let's get into number 2. Stock market tip number 2 for beginners out there. This is a big one, guys. This is a huge one, okay? Is always think about the reward and the risk when getting involved with a stock. Way too often people get just focused, blindly focused on what's the reward opportunity in a particular stock. They see the stock, they read about the stock, they read about this industry, they're super excited about it, and they're just thinking about how much money they're gonna potentially make in the stock. They're thinking about the reward, the prize at the end of the day, and what they don't even take into account is the risk involved with a stock. See, the stock market at the end of the day is one big game of risk reward, I call it, okay? What is my potential reward with this stock? How much, the valuation of the stock, where can I see this going over time? The market cap, what type of market cap could this company have over time? Versus, what's the risk going in with the stock? How much could the stock potentially drop if things go bad? What is the probability that things will go bad? All these things should be accounted for, okay? How do you know the risk involved with the business? Well, one, you look into the business fully, and in the 10K, which is an annual report for a company, they're gonna have an entire section just on risk factors for the business. And this is one of the most important things you could ever read up on a company, looking at all the risk factors so you know, okay, there's this risk factor, there's this competitive threat out there, this could go wrong with the business. Because if you understand that, it allows you to make a much better judgment on a stock overall, rather than just thinking about, oh, I could double my money in the stock. Oh my gosh, I could potentially triple my money. That's great. Definitely think about what's the potential reward. But if you're not taking into account the risk with this, you're just making a big, big mistake. Make sure you're accounting for the risk. Make sure you're looking at the competitive threats for that business. Who's trying to come after them? Because if you're talking about, you're buying stocks, right? These are companies with hundreds of millions of dollars in market cap, billions of dollars in market cap, tens of billions, or even hundreds of billions of dollars in market cap. When you're talking about gigantic corporations like this, right? Everybody wants a piece of that pie. Everybody wants to eat their lunch. Everybody wants to come after them. So all competitive threats need to be thought about. All risk factors. Are you looking at the balance sheet? Are you looking at how much cash they have versus debts? Are you even paying attention to this type of stuff? It's absolutely paramount you do that so you know going into that stock, here's my reward potential over here. here's my risk potential. And I do this with every single stock I own. I think about what could I see this company going up to if everything goes right, if my bullish thesis plays out, and if it doesn't play out, what's kind of the worst case scenario for this? And what's a bad scenario, maybe not worst case, but what's a bad scenario for that stock as well? What would the stock go down to in those terms? And the whole idea is taking the least risk possible while having the biggest reward potential possible, okay? That's why the stock market is a big game of risk reward, and you should always treat it as that, so make sure you're thinking about the risk and not just thinking about the reward, okay? That is stock market tip number 2 for you. Let's get into the last one, number 3. Stock market tip number 3 for beginners out there is, and this one prevents so many people from even getting involved with the stock market or investing in general, and this one really bothers me because it's one of the reasons why most folks never really build any wealth in their lives, and it has to do with don't have mistake anxiety. So many folks have mistake anxiety, so they think, okay, I'm thinking about investing in the stock market. What if I make a mistake? What if I put the money in the wrong stock? Oh my gosh, what if I lost money? And because they have that mistake anxiety, they can never even invest in the stock market. And I'm like, it's so ridiculous. It's unbelievably ridiculous, because think about it like this. Imagine if you were trying to become a basketball player, right? And you're about to take a shot in practice, and you're like, I can't take this practice shot. I can't do it because I'm afraid I'm gonna miss the hoop. It is so ridiculous. You would never get good at anything in life if we all thought like that. You would never get good at anything in life if you have this anxiety. And so many people have this anxiety about, what if I took my $1,000 and I put in this stock and it went down to $900? And they just like can't mentally get by that. And it's so ridiculous, honestly. It's so ridiculous at the end of the day, because how are you ever gonna, if you can't take any risk, you're never going to make any real money in this world, and you might as well just throw in the towel now and say, I'm going to be broke for the rest of my life. If you can't get past the fact that you do have to take some risks to get potentially a lot of reward, then you're just going to be broke forever, okay? I've never known one person in my life who was well off and didn't take some levels of risk financially to get there, either through investing or career decisions, or they took a step on their own and they started a business. You have to just get past that anxiety of, I might make a mistake, I might lose money. Okay, let's say you make a mistake. Let's say your worst case scenario happens. You put $1,000 in a stock and you lost all 1,000, like literally the company went bankrupt. First off, if you had the right strategy, you knew everything to look into, there's almost a 0% probability that would even happen. I've never once in my life ever invested in a company that went bankrupt, okay? That is ridiculous, okay? I never was like in a stock and it was like, oh, they went bankrupt. Like, how ridiculous that would have to be like invest in a stock and like they declare bankruptcy. Like, I can't even like fathom that. It is so ridiculous, okay? I've made mistakes in the stock market. I've lost money on some stocks in the past, okay? And I've never once been involved with any company that was like, oh, they just went bankrupt. Like, that is so unbelievably unrealistic. As long as you are understanding the risks going involved with the stock, you're looking at the balance sheet, you're looking at the income statement, where the business trends are going. As long as you're doing the real work behind it, it's almost statistically impossible, okay? But let's say that happened. Somehow you had $1,000 in a stock and it went to zero. Is that the end of the world? No, it's not. That $1,000 didn't change your life. What will change your life dramatically is the next 1,000 and the next 1,000 and the next 1,000, and building that into the next 1,000 and building up the ladder, okay? That's what will actually change your life, building the wealth. The fact that people have so much mistake anxiety is what ends up costing them more money than they ever believe, because they never get involved in the stock market. And don't be in that situation. Don't forget to smash that thumbs up button. Thank you for watching. Have a great day. Share this with somebody.